Fox Business Alert, take a look at Bitcoin. Just a second ago, it was down 5.25%. Right now, down 4.97% to under $86,000. It's at $85,858. It's kind of been a brutal 24-hour crypto freefall, dragging nearly all crypto stocks into a bit of a winter abyss here. In particular, the so-called Bitcoin hoarder company, Strategy. Strategy is at the very bottom of the NASDAQ. Shares are down 8.5% right now. Bitcoin at the moment is leading the pack for liquidations. In the past 24 hours, investors who own that particular crypto have sold positions to the tune of $205 million. But guess who sees this as a green light to buy? Strategy, the very company we just talked about. The company bought 10,645 more Bitcoin for about $980 million over the last week. The crypto Christmas buy means Strategy now holds just over 671,000 Bitcoins, valued, depending on the second, $50.3 billion. Of course, Strategy is the biggest Bitcoin holder in the world. The purchase comes less than 2 weeks after Strategy announced its $1.44 billion cash reserve to quell Bitcoin FUD, fear, uncertainty, and doubt. Joining me now in a Fox Business exclusive, Strategy CEO Phong Le. Phong, great to have you here on a day where there's a lot of action. Can we first get your thoughts on the macro picture here? We know Bitcoin is volatile, but what do you think triggered this 5% hit?
Yeah, look, you have to take a step back with Bitcoin. It's unique in that it's a generational technology invention. It's a macroeconomic innovation, and it's a capital markets breakthrough. And that makes it a singular asset class. And I don't think people understand exactly what it means in the short term, but they figured it out over the long term. If you think about major asset classes that might behave like it, you can talk about AI, which over the last year has seen a lot of volatility. I think the short-term impacts are like other risk assets. You have economic factors like the central banks of the US and Japan. I think you are seeing risk-off factors, lower liquidity. But over the long term, if I look at 2026, I'm pretty excited, right? I think we're going to see a more dovish Fed. I think we're going to see more risk-on buying as we enter the midterm election period. I think bank adoption, nation-state adoption is going to increase. So I'm pretty excited about the long term. Now, people wonder, well, when Bitcoin goes down 5%, why does MSTR go down 8-9%? And we're designed to outperform Bitcoin in the long term. We're leveraged Bitcoin. Over the last 5 years, since we entered our strategy on August 10th of 2020, Bitcoin's gone up 45% with 45% vol. We've gone up 60% with 78% vol. What that means is in a Bitcoin downturn, you're going to see Strategy go down a little bit more. But if you believe in Bitcoin for the long term, which are all the reasons I mentioned, you'll see Strategy perform even better over the long term.
You guys are always buying. You're not selling. You bought last week, and I'm looking at the various prices last week. I guess the high would have been 94,000. We are at the moment, as you see, I mean, at 85,000. You could have gotten it a lot cheaper. Do you ever think like that? Are you buying today?
Our average purchase price is $74,000. You can think of us dollar cost averaging in, right? We're not waiting for Bitcoin to go down or for Bitcoin to go up. Anytime we can issue capital that's accretive to our shareholders, which we still are, we have a multiple to NAV over 1.1. Anytime that we can issue capital that's accretive and buy Bitcoin or do other things that are accretive, we will. So we don't really think about the price so much as whether our capital issuances are accretive. And we've been doing that for the last 5 years. And yeah, we keep buying. We're net buyers of Bitcoin.
The one thing that you have done recently, which is different, is putting together this reserve fund of about $1.44 billion. I mean, I looked and I read about this, and you guys use the term, this should really be helping in perpetuity to stabilize at least the concerns that people have, especially the preferred shareholders, that they might not see their dividends. However, at $1.44 billion, I want to know how you arrived at that price, because I've seen some estimates that say your interest and preferred share dividend outlays now run at around $800 million a year. So at that pace, in a year and a half, $1.44 billion is going to be gone. How is that enough?
Yeah, if you think about Bitcoin cycles, and there's arguments around whether it's really on a 4-year cycle or a 2 or a 5-year cycle, but we thought to ourselves, how much US dollar cash coverage of our interest and dividends, which to your point is $800 million, do we want to have? I think 2 to 3 years is the right amount. If we had 3 years, that would be $2.4 billion, and that would take us out to 2029. And then at that point in time, we'd have to look at other ways to service our debt. So we thought about, is it 1, is it 2, is it 3? I think eventually 2 or 3 years makes sense for us.
Phong, let me play devil's advocate only because it's not exactly apples to apples, but when FDR signed the Social Security bill in 1935, the point was to protect the nation's most vulnerable, the elderly, the disabled, et cetera, during very difficult times. And the way it was structured is this thing's going to last forever. Each generation will pay into it so that they can then participate in it. However, now we know that by 2035, Social Security is going to run out of funds. So how is it possible that your reserve fund, if there is a prolonged crypto winter, that it's going to last? I mean, have you modeled for a worst case scenario?
Yeah, and the reserve fund is there to pay via our US dollar reserve, our interest and dividends. We do have Bitcoin derivatives we could create and sell, and we have the Bitcoin itself. So, I'm not thinking about 2029, I'm thinking about 2100 or 2100, whatever we decide to call that year when we get there, right? We'll have 3 years worth of US dollar reserves, gets us to 2029, and we have 72 years right now of Bitcoin reserves, which gets us to 2,100. That's the thought. And I think folks need to remember, if Bitcoin goes up 1.4% a year, we'll be able to pay for our reserve, pay for our dividends into eternity. That's 1.4%. And I understand there are people who are not as bullish on the asset class as we are. But we're not talking about a 40% return or a 30% return. We're talking about 1.4%. And of course, there's the downside scenario. If Bitcoin goes down 50%, we can still pay our reserves through Bitcoin, through US dollar. We can pay our dividends through 2065. So this is, I think your analogy is fairly apt. We are thinking about this as trying to create a bulletproof balance sheet for the next 65 to 100 years.
What is the plan for the engine of growth if Bitcoin were to suffer a 3-year crypto winter? I mean, not just I'm going to protect the dividends for our preferred shareholders, but how do you get a company to grow? Are you still going to then lean back on the software component? Because that's how the company first presented itself, as a software company.
Yeah, if you think about the product, certainly we have a software company and that's worth anywhere between $2 and $3 billion. But the engine of growth is digital credit, right? There's the balance sheet side of what we provide, which is a balance sheet that has 670,000 Bitcoin, $57 billion in Bitcoin reserve. There's also the demand side. We've created a product called Stretch, which is a perpetual preferred that pays 10.75% cash monthly and tax deferred if you don't sell the underlying asset. That is an extremely attractive product. And as we can continue to issue more of that, and we get through our distribution channels and sell more of that, that will drive accretive acquisitions of Bitcoin and accretive acquisitions of capital to our balance sheet. So we're not just a Bitcoin buy and hold company. We're an innovator in digital capital with Bitcoin behind it.
But it still feels like this is a business model that requires Bitcoin to continually increase in price. And that 10%, it sounds really juicy and very attractive, but is that set in stone? That is a promise to people who do invest in that piece of it?
It's set in stone that we're going to pay the dividend. We have, the board has the rights to delay the dividend, right? And then there are rights to the shareholders of the preferred. But yeah, you're right. There is a fundamental belief that you have to believe that Bitcoin is a generational asset class that fixes macroeconomic issues, that combines very unique technologies, and the entire banking sector and the entire nation states around the world are going to get behind. You do have to have a fundamental belief in that to believe in our company. And I think there are a lot of folks who do.
Phong, listen, we're watching it. It has been a fascinating decade or two as this becomes a very important investment vehicle for a lot of people. Thank you for coming on.